please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, the first trade is actually flat as flat can get. 10,400 is where the markets have opened. That's about 8 points down. And the Sensex opening about 9 points down again. So very, very flat. The Nifty Bank has given up some gains. Not much, actually, just about 20, 30 points after the rally yesterday. So it's down 0.1. And, well, not even sticking there. It could be a better day than that. Wipro is the one that's doing very well in the big cap space. Bajaj Finance actually now overtaking Wipro with a 0.7 gain. Wipro, of course, it's a small news, but still 0.5% higher. Tech Mahindra, actually tech stocks are doing well. In the top 4 gainers, 3 are tech stocks. Tech Mahindra, Wipro, TCS, all of them in the green but just about 0.5%. And then you have Dr. Reddy's, UPL, that's also agrochemical stock. And then you have Vedanta, Oro, M&M, HCL Tech, all of them up about 1/3%. The index still continues to remain flat, and that's because IOC, I think that's the ex-bonus impact, down about 3 points. Down about, 6 points and 3%. BPCL, HUL, ICICI Bank. Importantly, ICICI Bank, SBI are showing a dash of red at this point in time, about 0.6 down.
Okay, it's a ho-hum sort of an opening for the mid-cap index. Nothing impressive. It's mildly in the green. The market breadth is decent. 700 stocks on the advancing side. The space to be in this morning is the fertilizer space, as we told you earlier. Nagarjuna, RCF, FACT, NFL, all looking pretty good today. In fact, some of those stocks are now up. Zuari is also up about 2%, GSFC, etc. Himadri Chemicals, because of that anti-dumping duty on Chinese imports, Himadri Chemicals is gaining more ground now, 3% higher on that stock. And a couple of these technology stocks hitting new highs. Tech Mahindra is at a fresh high today, so 645 now on Tech Mahindra, looking pretty good. It has KPIT Technologies for companies, so that one is up about 0.5%, sitting on a fresh 52-week high over there. And talking about 52-week highs, names like Venky's and Godrej Agrovet are other stocks that are sitting on 52-week highs. But looking at some losers now, you do have some of these real estate players like HDIL under pressure. JP Associates is down. Ashok Leyland is coming in for a bit of profit taking. GMR Infra is also just a tad bit in the red. Otherwise, the market is absolutely flat. Just, I think, consolidating around that 10,400.
Oh, yes. So decent opening, but let's see. I mean, because, you know, it all boils down to risk reward. Once again, the market is opening at the higher end of the range. So it will be interesting to see at lower level if there's some buying which happens. Rupee, by the way, has weakened a bit from the start. So that's also interesting.
I think it's the WTO impact.
Exactly. So for now, let's see. Mid-caps are doing well. The advance decline is in favor of advances. Ashwini, your thoughts on market opening, and is there a trade on the Nifty or Bank Nifty?
So you are getting a bit of a decline on the Bank Nifty, so we can use that to buy into the Bank Nifty, because the decline is not very sharp and chances are it will get bought into. PSU banks are coming back. I think this ICICI Bank, State Bank weakness will also get bought into. So you are getting a nice dip both on Nifty as well as Bank Nifty, because both have tested support early morning, and I think from here they should recover and probably get into the green. I think fertilizer stocks could do fairly well for the day, so that remains a theme. But overall, I would think Bank Nifty also will make intraday highs at some point.
Okay, so you're buying the Bank Nifty, Ashwini, at this point. What would be the stop loss for that trade?
Stop loss is low of today, which is about 24,820, which has just been hit.
Okay. Yep. Go ahead.
No, Sudarshan, what about you? What would be the call now? I mean, it's flat, but the fertilizer pocket is looking very good. Anything else that you've spotted?
Yes, but it's not fertilizers. Jubilant Foods is a buying opportunity. I think there's a momentum rally for the day also. And the second is L&T. So this is for buying. The index is only a positional trade for a short, nothing in the intraday.
Okay. Well, actually, at the moment, markets still kind of looking for direction, a little bit in the red. Ashwini, if I missed it, what is the Nifty Bank trade?
The Nifty Bank trade is a buy because it gapped down to 24,820. From there, it's almost recovered 100 points. So that means, you know, on declines, there is buying on Bank Nifty. Maybe not a 300-point rally like yesterday, but I think the upper end of the range, which is 25,050 thereabouts, a rally to that point can easily happen.
Okay, now the mid-cap index is actually picking up a bit. It's up almost 0.4%. IDBI Bank is looking pretty good, so that one is up in the green by about 5% and some statements coming in from Suzlon on completion of some projects, etc. So keep an eye out on that. Mitesh, yeah, go ahead.
No, I think Nigel has sent us something. I know now why HDIL is down. I think Nigel has sent us this report on Times of India's front page. That's talking about a 1,200 crore fraud by HDIL's
which MADA
company.
has pointed out.
Exactly, MADA is pointing out a 1,200 crore fraud by HDIL's subsidiary company, and that is why HDIL, which supposedly had good news, actually is down about 6%. And this is actually one of the largest projects of redevelopment projects that the name of the company
related to the airport, is it?
No, the name of the company is about the Patra Chawl at Siddharth Nagar in Goregaon. There are 3,000 flats. Guru Ashish Construction, that's the subsidiary of HDIL. I think that Nigel has just sent us this information, and let's just pull out the intraday chart of HDIL. And there's a 6% downtake. The market does not like anything to do with fraud. We should try MADA actually. There's a statement from the MADA's attributed
Vice President Milind Maiskar has confirmed that an executive engineer was suspended, and on Tuesday the Economic Offences Wing of the City Police registered an FIR against this construction, Guru Ashish Construction.
The notice has been issued to take over the project since it failed to complete it in 10 years. So that's another charge, but it's more importantly alleged connivance of MADA officials also in the fraud. So the report is already calling it a fraud, and it's of course now before the NCLT. That's a separate issue, being in front of the NCLT, but calling it a fraud is a different issue.
Yeah, there's also follow through on that it's the HC has asked HDI and its director to also submit the list of assets and IT returns. So that's the reason. But we'll try to get MADA as well.
Okay, but there is a quote from Sunny Devan saying that we are not aware of the complaint.
Okay.
That the complaint is that they have issued an FIR or filed an FIR, but he says he's not aware of the complaint. So
so we'll try and get to the bottom of this. For now, HDIL is reacting to that news.
I want to ask Deven about the banking issue. Deven, I don't know what accounted for the rally yesterday in the Nifty bank stocks. I was getting calls about whether there is forbearance on the Reserve Bank's NPA resolution circular or on the mark-to-market losses of banks. On both these now, there is absolutely no development, nothing expected. Certainly on NPA, the governor's speech was very strong to the contrary, saying he wants to ensure NPA is resolved. And on MTM, I can assure you, a letter is going from the bankers, nothing imminent yet. Would you back the banks?
Not really, Lata. I think though they have recovered yesterday, I think on the hopes of recovery of money that these banks would have. Particularly, I think the news came up for Bank of India, which has shown a recovery of around 7,000 crores in last 2 months. On that front, I think the market is remaining slightly positive. On the other side, I think most of the PSBs are oversold, definitely for sure. So technically, I think it may quell for a reason for, I think, some amount of short covering led buying. But I don't think that anything fundamentally changes or likely to change in the near future. So it is safe to stay out from this particular space and concentrate more where the money can be made easily.
Okay, well, we were talking about stocks. Let's also get you the latest happening on PNB. It's a CNBC TV18 exclusive. We learned from sources that PNB has detected another case of an LOU fraud at its Brady House branch. Utkarsh Chaturvedi joins in on the phone line with more details. Utkarsh, what now? What are you picking up?
So this is another case of LOU fraud which has been detected by Punjab National Bank. Not a very big amount. This is an amount, this fraud is amounting to somewhere around 9 crore rupees, and this is against a company called Chandri Paper and Allied Products Limited. What is important here is that the two accused employees in this FIR as well is Hemant Kharat and Gopulnath Shetty, which were the ones who were the accused in the case of Nirav Modi and behind bars at this point of time. So this is a completely different company, but the same modus operandi has been followed here. 2 LOUs were issued last year in April to the tune of 9 crore rupees, and this has been detected by Punjab National Bank. Now on the 9th of March is when they have filed a complaint against both of them in CBI, and they have now registered an FIR against both of them as well. So what is more important is not the amount, but the fact that there are more companies which are doing this, and Gokulnath Shetty was conniving with other companies also, except neither, not only Nirav Modi and Mehul Joshi.
Yeah, thanks Utkarsh for that. The angle over here is important because what the market was worried is, was Nirav Modi having this fake LOUs only with PNB or with other banks? But not what we have to worry is, was Gokulnath Shetty only trading on this LOU but others?
It's
but
it's only 9
No, but the point is, it means that both CBI and banks are looking at all their LOUs.
Yes.
So some such ghosts may come out.
Yes.
Fortunately, this one is only 9 crores.
This one is only 9 crores. I won't be surprised if you start to see recovery as well in PNB. But let's invite, before that, Ashwini, is there a big call for the day?
Well, all PSU banks are crooks, that is the call.
Oh, please.
But I would
no, you can't say that. Okay, anyway, go ahead.
Well, I don't have to say it, CBI is saying it. Okay. These dips, I think, can be bought because now they are stopping, they are not reacting as sharply as they did earlier. So I would still buy this dip that we are getting on the bank nifty. Overall, I think the market is positive for the day, and it will move beyond this.
Okay, got it. Gentlemen, thanks a lot for taking us to market opening. Of course, we'll come back to you around 10 a.m. Let's invite our market master for the day then, Mihir Bora, Director and CIO at Max Life Insurance, now joins us. Mihir, good morning. What's been the trend of fund flows at insurance companies? Because we got the mutual fund data, which was quite supportive for the bulls in the month of February when we had that big decline. Is the case same for the insurance companies as well?
Yes, if you see the February numbers which came in for the first year premium collections, the industry is still showing a healthy growth. Of course, a little bit tapered down from the low base of the demon months that we saw earlier, but still quite healthy. So I think the shift to financial savings is continuing both in insurance companies as well as in mutual funds.
Okay, Mihir, good morning. Just analyze all the macros on both sides. On one side, we have definitely an improved earnings story, and the mutual fund, the liquidity flow, which is not ebbing at all, the faith of the retail investor in equities. And on the other hand, you have worries about probably the political stability not being what it was this last 5 years, as well problems with the banks and another bout of poison being recognized by them. If you weigh the pros and cons, where is the market headed? How much can we lose? Or do you think it's going to be a net gain?
So I think we should still make money if you were to take a 12-month view, because one is that we are coming off the low base of the demon and the GST shocks that we had last year. So as far as the YOY growth rates are concerned, till September we should not see a problem. If you look at any number, commercial vehicle sales or credit growth or IIP numbers, they should continue to show positive trends at least till September. The interesting part will be to see whether the momentum sustains and we see further acceleration from the September-October month onwards.
So what is the biggest risk to this market now, Mihir? And do you think that there is a big sell-off coming, or could it just be a time-wise correction that we could see at worst?
I think it's a couple of risk factors that we would like to highlight. One is that the global situation is turning a little bit volatile. You have this more assertive US, and it looks like there will be further tariffs and trade barriers erected for various commodities, and I don't think India is going to be any exception. While we are a net importing country, we run a current account deficit, but that might create the overall situation might become a little bit volatile on the global front. So that's one thing that we need to look at. Second thing on the global front is that interest rates are definitely creeping up, and what that does to risk assets and flows globally is something that we need to see. And as far as India is concerned, as I said, at least for the next 3 to 5 months, we should see a good base, and the markets and the earnings momentum should sustain. The key, as I said, is to see whether from October, November onwards, we continue to sustain this upward trend. So I think a little bit of a tentativeness in the next few months, then we'll take a fresh call as to where the Indian markets are going.
Okay, by the way, PNB is getting back into the green. So we thought, for now, perhaps the market has absorbed most of that and is moving on, and the stock is in the green.
About the quality of the rally only because IDBI is up 5.7%. I mean, the new NPA rules are quite hard, and IDBI is an ex-development for these power assets. So it will get to over 30% NPA. Then why are we, giving it this kind of a valuation? It just makes me a little scared.
Oh, yes, but of course, the IDBI Bank has been a different story altogether. So there's been a lot of kite flying as well here. But anyway, Meher, what about portfolios from here? Because last year was quite interesting. The mid-cap index went up 48%, so a lot of funds did well, portfolios did well. This year, of course, it's turning out to be a bit more tricky. But still, there are pockets which are making new highs. Ashok Leyland, for example, mid-cap IT. What would be your top picks in terms of sectoral moves this year?
So broadly speaking, we are not changing our theme, which is consumption and government spending, which are the drivers of the Indian economy. And in consumption, we have the basket of FMCG, automobiles, as you mentioned, and commercial vehicles, of course, doing well on the back of rebound in the industrial production. So consumption and a little bit of rebound in industrial production linked to that is one theme. And I think given the fact that you have elections coming up next year, we should see government spending on infrastructure and those kind of projects, especially on the road side. We have seen great progress, but we should continue to see support to the farm and the rural sectors. So even the government spending, not only in capex, but to the rural segment, should continue to boost consumption. So I think consumption, both urban and rural, as well as government linked spending, should continue to do well. And linked to this is the fact that the credit growth will be supplied mostly by the private sector. If you look at the last few months, mostly probably about or even more than 100% of the incremental credit is being supplied by the private sector, and that trend will continue. So private sector financials, banks as well as NBFCs should continue to do well.
Okay. I don't see you mentioning IT and metals, the two globally focused sectors that have done well. Will they continue the good run? Will you add on to your positions?
Yes, I didn't mention them because we are talking about themes, but IT definitely with the US corporate sector looking good because of the tax cuts. We do expect increased spending in IT, and within IT probably companies which are more capable and which have developed a greater focus on the digitally enabled ecosystem space should continue to do well. So I think that, as you mentioned, there should be good opportunities in the mid-cap space. There are some companies which have done this quite smartly. They should continue to do well. Metals will be more of a global call. We are waiting till the end of March, middle of April, to see whether the Chinese production cuts are sustaining. If that happens, we may see another leg up in metals. And one other segment which looks particularly interesting in India is the oil refining and marketing companies. Not only oil refining and marketing, but even the petrochem companies are looking good. Because the fear of marketing margins not sustaining has not materialized. You do see companies making oil marketing margins, petrol and diesel marketing margins back to 2 to 3 rupees per litre, which was a fear that probably in high oil scenario where the government is going in for elections next year and later this year in the States, the petrol and diesel prices may not be rising at the rate at which oil prices are rising. But that doesn't seem to be working. There seems to be reasonable freedom in the pricing. So that's one more thing that is looking good.
Okay, Mihir, we'll leave it at that. Thank you for speaking about all those themes and discussing the markets with us. But we need to move on now. Textile stocks like Arvind have been in focus after the RBI discontinued those issuances of letter of undertakings and letter of comfort for trade credit. But Arvind Smart Spaces, which is the realty arm of the fashion and apparel firm Arvind, is also looking to cross the 1,000 crore revenue mark in the next 4 years. So that's the big growth story for Arvind. Kulin Lalbhai, the executive director of Arvind, joins us now to talk about that. Kulin, before I ask you about the recent developments with respect to, the LOUs, etc., just tell me a little bit about Arvind Smart Spaces. What kind of geographies are you guys planning to get into? How is the demand looking? What kind of growth do you see?
Yes, so our Smart Spaces business is 10 years old now. It started developing projects on Arvind land, but since the last 4 to 5 years, the company has really come of age, where it's completely an independent entity which is developing new parcels of land. And, we demerged this business in 2015 from the parent. And ever since then, it has seen a very rapid growth. Both top line and bottom line have grown at more than 30%. And we have delivered around 2.5 million square feet already of residential projects. And in the next 3 years, we have another 8 million square feet being developed, primarily in Bangalore and Ahmedabad. So we are focused on the mid-income residential segment in these two cities, and we've just recently made a foray into Pune.
Okay. Good morning, Colleen. Thanks for joining.
Good morning.
Will you also enter the now favored sector of affordable housing and commercial? Will it be all residential, or will you also get to commercial?
We are focused on the residential space. You know, at the stage of the company where we are at, we want to have a focused strategy. We are seeing a lot of traction in the mid-market space, and definitely affordable is an area we are already in. I think the government's focus on home ownership is going to create a lot of primary demand. And since we are already in that mid-income space, the affordable space is an adjacency which we have also entered. So we'll definitely be in the affordable and the mid-income residential space.
So you said you just entered into the Pune market. Tell us a little bit about, you know, what kind of launches are you looking at? What kind of realizations do you hope to see over the next, say, 1 to 2 years?
Our core focus and where we are expanding the most is still Bangalore, where we will have 5 projects which we are executing at the moment. And our projects are typically, you know, 600 to 1,000 units in one location. Our realizations would be anywhere between 4,000 to 5,500 rupees a square foot. So it's primarily in the mid-market. Pune, we are just entering with 1 project right now. Ahmedabad, again, we have 3 to 4 live projects. So the company is currently in the scale-up mode. In fact, in the next 1 year, we will be aiming to deliver 4 million square feet. So that would be double of what we have done in the last 6 years or so.
Okay. Colin, good morning. What about, you know, Arvind branded segment? Is the consolidation over, or are you adding more brands? What's the outlook here in terms of the kind of growth that you see?
So we've been maintaining that, you know, with the current portfolio of over 15 brands that we have, you know, the business should see a growth rate of over 20% year on year. So since we have added a lot of brands which are still scaling up and relatively undersaturated, you know, currently we are growing the existing portfolio rather than looking at brand additions.
Okay. Just a word on this LOU business. Any impact at all on your business or on textile business? Generally, textile sector?
So we use all kinds of ways to raise capital, but the LOU instrument is very negligible as far as Arvind is concerned, so it would have no impact on us. And I'm not very sure about all the other textile players, but I would think that it will have a negligible impact.
Okay, you said that you will be delivering 4 million square feet of projects in Arvind Smart Spaces. This is over, is it in the next financial year itself, or is it spread over about 2 to 3 years?
No, this is next 12 to 18 months. So
Okay.
This is out of the 8 million over the next 3 years. We have quite a bit coming online in the next year and a half.
Okay, and any plans to get into commercial spaces as well?
Not as of now. We are focused on the residential market. At least for the next couple of years, we want to scale up in the residential segment itself.
If you don't mind, once again, I'll take you back to textiles. If you can just tell us how many of the brands, the power brands, are giving you profit, in the sense giving you outstanding profits. So what is the ROCE from them, from the power brands, and when will the mix in the entire textile business shift in favor of the power brands?
So in the fashions business, which is separate, Lata, from our textile business, it's a 4,000 crore business. That's the business wherein all our brands are housed. And the power brands that you mentioned are already in a very high cash throwing state. So, you know, all of them are more than 30% return on capital employed and cash surplus. You would have mid-digit EBITDA margins in all the power brands. So those continue to grow at a 15% plus growth rate, and the return on capital employed is north of 30%.
Oh yes, we know that you have this big 1,500 crore capex plan as well. What is the fruition date, and how will that start impacting in terms of revenue growth? How and when?
So the 1,500 crores which we are spending is going to be in our textile business.
Yes, I know.
And this is going to be over the next 3 years.
Okay.
So we are currently deploying around 500 to 600 crores.
Okay.
And it's along, 4 themes. So it's garmenting, where we are adding a lot of capacity and vertically integrating, technical textiles, performance wear, and the branded textile segment. So these are the 4 segments, and we're already starting to see that the revenue growth rate of the textile segment is going up. So in the last quarter, we grew the textile segment also by 9%. And you will see in the years to come, as we ramp up on our garmenting capacity, you will see a higher growth rate in our textiles business.
Okay. Kulin, thank you for stopping by and speaking with us about all your businesses, and all the best for the quarters to come. That's the word coming in from Arvind. Arvind, a couple of the stocks are now up quite a bit. In fact, just look at that. Arvind is up 1.5%.